Hey guys, so I'm going to show you another one of our strategies here, which is a really cool one. This one does very, very well over a long period of time, as back tested. It's called debt trading, or we call it also economic indicator trading, because you can modify this thing to basically trade any kind of economic indicators. In this case, we are looking at the Fed's balance sheet, right? So we're seeing how much money is the government spending. If the government is spending a lot of money, we want to buy stocks, right? Stocks tend to do very well when we get a big boost from the government, right? So government spending, at least in the short run, right? We could talk about long run, right? But at least in the short run, you'll see a big jump in stocks. We saw this in 2022. In 2020, we saw this. We also saw this in 2008, right? Government starts spending money. We end up making quite a bit of cash, okay? So right now what I'm doing is I'm running a back test for you, okay? Which means we're gonna go from 2012 to today, where I'm sitting at is March 1st, right? And we're gonna see in simulated trading how it would have done over that time period. You see down here, it's doing a back test and it's about halfway done, right? And then once that back test is done, I'll be able to show you the statistics of it and how well that would have done over that time period. So simulated over that time period. And then also we'll see in the broker here, I have my broker open. This is fake money, $100,000, just so I can show you a little demo. You'll see that it will automatically go in, it will automatically buy some stocks for you, right? And again, this doesn't have to be specifically debt. You could change this to be other economic indicators. And you can also make it so it's not just stocks. You could trade crypto, you could trade futures, you could trade options, you could trade Forex, you could do all sorts of things. Government spending and other economic indicators impact everything, right? So here are the payoffs, right? Here are the graphs I was promising you. This is simulated trading. If we had used this since 2012, the blue line is us, right? This is our strategy. The red line is S&P 500. You see we have a monster returns compared to S&P 500. So if you had used this over that time frame, you would have just had smoked S&P 500, right? This is where we could take a look at all of our trades and all that value. And then we also have a tear sheet that comes out, which is really, really cool. Wow, this is even better than I thought it was. Geez. So over this time period, I really got to put some money into this. Jesus, this is crazy. Over this time period, the S&P 500 would have made 256% returns for you, which is about 13% a year, okay, over that time period, okay? Whereas our strategy would have made 1,243%. That is 5 times more than S&P 500. You would have had 5 times more money than just putting into the stock market if you had used this strategy, okay? You would have made 29% a year as opposed to 13% a year, right? Or benchmark being the S&P 500, SPY. So monster returns. You would have absolutely killed it, made way more money than S&P 500. Our Sharpe ratio is also better, which is a measure of risk versus returns. So not only are we making more money, but we're also making more money on a risk-adjusted basis, right? So we're not just, putting in a ton of leverage. We're actually making more money using this strategy, even despite the risks, right? You see here that it is a little bit more risky, admittedly, right? The S&P 500, the worst month that I had during this time period was 2022, and it lost 35% during that time period. This strategy would have lost 55% during that time period. Yes, it would have maybe made your stomach turn a little bit around this time period, but it would have bounced back much faster. And you still, by the way, even when it was down that 55%, you still would have been up more than the stock market. You can see right here on the line, right? The blue line was still higher than the yellow line, and that's even after that big drop, right? So you're just making a ton of money going through this strategy, right? You can go through, there's a bunch of other numbers that you can look at here. We have, this is our tear sheet. If you take our course, you'll learn how to create these yourselves and how you can modify these things to basically, use different economic indicators or, use it in a different kind of way. You see here the strategy, how it performed every year. We beat the S&P almost every single year on record. 2012, we beat them. 2013, we beat them by a little, but we still beat them. 2014, we smoked S&P 500. 2015, okay, they beat us, but not much happened that year. We beat them in 2016, beat them in 2017, 2018, okay, fine, they have that year, right? 2018, we smoked them. We get almost triple the returns. 2020, look at how big this chart is. If you had invested using this investment in 2020, if you had used this, you would have had a massive amount of money that you would have made during that time period. So fine, yeah, it would have dropped a lot, but by the end of the year, you would have made like triple your money. You know what I mean? This is a massive return in one single year, right? We also beat them in 2021 and 2022. They've been beating us so far, but we'll see how the year ends. 2022, the whole market has been off to a rocky start. We'll see how it ends. We'll see if we beat these guys in this year as well, right? And here you have a bunch of other things. You can look at our volatility. Yes, we are riskier, right? But not that crazy, right? We're still pretty much in line, and honestly, the returns that we make really make up for that risk, right? And then you could also see a bunch of other metrics like when did we lose money and how long did it last? This is that drop. That drop did not last for very long. So fine, we lost that 50 something percent, but we got that money back almost immediately. You could also see by the month, right? Here's again that March 2022, we lost 28% in March, but the next month we made 40%. You know what I mean? So we more than made up for it within 1 month, right? So fine, we had that quick dip down, but we were right back up again real fast. So you can see this breakdown, right? And again, we'll show you how to do this stuff. You can go through all the tear sheets. You can modify these strategies to do whatever you want, right? And that's pretty much it. That's pretty much our economic trading indicator. Oh, and let me show you here. Sorry, one last thing. So you guys can see that it actually bought these stocks for us. So what it does is basically buys these two stocks for us based on the economic indicators, right? So if we want to open up the strategy here, we'll see our debt trading strategy, right? Basically, it buys these two assets, UPRO and TMF. They're leveraged indexes. It helps us use leverage whenever we do bots. The leverage helps us make more money because we'd be more intelligent about it and still use that leverage in an intelligent kind of way. So we're using the leverage S&P 500, leverage treasury bonds, and we are changing the weightings between those two depending on how much money the government is spending. So if the government is spending a lot of money, we go heavy into UPRO. If it's not, then we're going to be between these two, we're going to have a balance between these two of 60-40, and we're going to be automatically rebalancing on a regular basis in a very intelligent kind of way to make sure that we are buying low and selling high, right? So yeah, so that's the strategy. You see that I bought these two for us. If you keep running the strategy over time, you will see that it will be swapping these things in and out in an intelligent fashion, rebalancing, owning more of one than the other, and making you money in the long run, right? And this is one heck of a graph. I mean, geez, it really makes you want to put some money into this one. This is great. Cool, awesome. So I hope you enjoyed this presentation, right? Again, if you take our course, we'll teach you how to make these tear sheets, how to do all this analysis, how you can modify the different variables and try to make your own and see if maybe you can even beat this, right? Let's see if you could do something even better than this using your programming skills. Awesome. Thank you very much.